Hi, Mark Gordon with GoldenTicker.com on Wednesday, March 16th, 2011. And today the NASDAQ lost 1.89%, slicing through this green dotted line, which is the 100-day moving average, which is usually a place of support. And yesterday we did get some support. It came down through it on some heavy volume, but then closed above it. So it looked like there was some support there. But today it even went lower and on more volume. So losing support of its key 100-day moving average is not a good sign. We lost support of the blue line here, which is the 50-day moving average last week. And we broke this long-standing uptrend that was in place since September as we came into March here. Lost that, and then we had a little bit of support down here. Thought a little triangle was forming here, but broke through that, and now we're just heading lower, it looks like. So this we called a correction a few weeks ago, and the correction is deepening. And will this turn into a full-blown bear market? We don't know. Certainly, with all the news coming out of Japan, this has the potential of turning into a massive bear market. But we'll let the charts decide. Here's a chart of the Dow. Same thing. 3 distribution days in a row, and we have a slicing of the 100-day line on heavy volume. S&P 500 down 1.95%, 3 distribution days, losing the 100-day moving average. Same story with the larger cap stocks. So nowhere to hide here. Looking now at a chart of Apple, we can see that we sliced through the 100-day moving average here and closed just under it on very heavy volume and a pickup in volume. Not a good sign. Lost the 50-day moving average here, this blue line, yesterday. Not a good sign. This would be the first time that it lost the support of the 50-day moving average back in September when this rally started. And looking here at a weekly chart of Apple, we can see that the last time we breached the 100-day line was back here in late August, and that was before this rally started here. So not a good sign for Apple, and a lot of traders do look at Apple as a bellwether stock. So this is a sign that money is leaving the markets, and we're down about 6.25% for the week so far. Another bellwether stock, a big cap stock, is Amazon.com, and that too has breached the 100-day moving average actually several weeks ago, and broke its uptrend when it double topped here back in February. So it's been falling for weeks here. Networking has been strong, and here's Aruba Networks, which has been a leader and hanging in there pretty good, way above its 10-week moving average here, kind of going sideways the last several weeks here, and volume is not too bad here. So networking stocks hanging in there okay. And some of the leading retailers have been doing well also. And here's Chipotle Mexican Grill, getting a lot of support here down at this blue line, the 10-week moving average, and kind of just biding its time here the last 4 or 5 weeks here. Topped out here in early February at $275 and had a little bit of a correction here, putting in this sort of new little flat base. Let's see, 1, 2, 3, 4, 5 weeks. So it's a flat base right now. So yeah, some retailers hanging pretty tough. Here's a daily chart of Concho Resources, a leading oil and gas stock, getting lots of support down here at the blue line, which is its 50-day moving average, not breaching that, and down slightly today on a pickup in volume, which is not so good. And this red line, the 21-day moving average, is kind of becoming overhead resistance here for the last several weeks. So we can get above that, it might go to new highs here. But Concho hanging in there. And Green Mountain's been really very strong. Up 4.09% today to a new high, and this big gap here is up, I think, about 22% in one day on huge volume. This is when they announced that they're doing a deal with Starbucks. So this company doing very well. And here's the chart of Netflix, lost 1.5% today. And Netflix came here in mid-February and topped out, and then had a 60-point pullback all the way through its 50-day line down to its 100-day line. Got support there, and now we're rallying back. And we had good volume yesterday, so this is a good sign. Netflix coming back to life, getting support down here. There's another leading tech stock. This is Skyworks Solutions, down 2.5% today. Been in a nasty correction here. Topped out here in mid-February at almost $38. Now down here testing the $29 level here and the 100-day moving average. Volume has been heavy during the drop here, and the trend is down. So Skyworks not doing well. So I think the story is that the general markets are correcting. They're going down. Most stocks will follow the general market direction. Some are hanging tough though, like retailers and select networking stocks, but it just doesn't pay to really be aggressive in these types of markets when the general market is falling. Sooner or later, if the correction deepens, they'll come for everybody and eventually take out everyone. So if your stock starts acting funny, breaching the 50-day moving average or 10-week moving average, and not being able to rally above it, and if volume was heavy on the way down, then you might think about cashing in and taking some profits. So as for now, the markets are correcting, and it's best to stay on the sideline and raise cash.